So in this problem, we're going to look at the decision to discontinue either a segment or a product line. So just as a review, in this chapter, you have 6 different types of problems that all relate to short-term decision making. So in the first video, we talked about pricing. Then we talked about special order decisions. And then again, this will be the decision to discontinue. So the first thing I want you to keep in mind is that when you have a decision to discontinue, oftentimes the company is not able to eliminate as many fixed costs as you might expect if they eliminate a division or product line. For example, in my lecture notes, I think I mentioned a grocery store that's considering eliminating the floral department. Well, even if they eliminate the floral department, the insurance on the store is still the same. The property taxes on the store is still the same. Some of the salaries, like the store manager's salary, would still be the same. So the thing that ends up happening at companies is they often, even if they eliminate a product line or a segment, they don't end up saving as many costs as they initially thought. So it's important in these problems that you carefully pay attention to what's happening, in particular with the fixed costs. So in exercise 8-39B, which is at the bottom of page 492 in your textbook, it gives us a problem where the company has a wood flooring product line and a laminate flooring product line. So when we first look at this information, it at first, if you just look at this information, you might immediately think that they should definitely eliminate the laminate flooring line because it's showing a $24,000 loss. But if we read in the textbook, it says total fixed costs will not change if the company stops selling laminate flooring. So what that means is if we stopped selling laminate flooring, we still would have these costs, which probably relate to, like depreciation at the store, salaries, insurance, property taxes, things like that. We still would have those costs, but we would have lost the $40,000 of positive contribution margin that the laminate flooring line is providing to the company. So in number 1, it says, will discontinuing the laminate flooring add $24,000 to operating income, and explain? So clearly the answer would be no. And actually, if the laminate flooring line was discontinued, we'd have lost contribution margin of $40,000. Again, we have no fixed cost savings to offset that. So actually, we would be showing a decrease in operating income of $40,000. Again, because the point is we would still have these costs. What is that, $64,000? We'd still have that $64,000 of fixed cost, but we would have lost the $40,000 of positive contribution margin. So we obviously wouldn't want to do that. Now that's a little bit of an unusual situation that we wouldn't have any cost savings if we were able to eliminate a product line. So let's look at number 2. It says, assume that the company can avoid $27,000 of fixed expenses by discontinuing the laminate flooring product line. So these costs are direct fixed costs of the laminate flooring product line. Prepare an incremental analysis to show whether the company should stop selling laminate flooring. So again, in any decision to discontinue problem, we'll start with the loss contribution margin. So again, let me fix this. So if we eliminate the laminate flooring, we would lose out that $40,000 of positive contribution margin. But in this case, we would have fixed cost savings of, what was that, $27,000. So again, down here in the fixed cost, we maybe would have some salaries that directly relate just to laminate flooring, and we could fire those people. I shouldn't have said that with such glee. But anyway, let's see what our effect on operating income would be. So those two together. Oh, we still don't want to do that because, again, what this is saying is if we eliminated the laminate flooring division and that allowed us to save $27,000 of fixed costs, that's still not enough to offset our lost contribution margin. So that would result in a decrease in operating income. So again, oops, I misspelled that. So again, we would say no to that. So we don't want to do that one either. Okay, number 3, the last one. Now assume that all of the fixed costs assigned to laminate flooring are direct fixed costs and can be avoided if the company stops selling laminate flooring. So that means we would be able to avoid all of those costs. However, marketing has concluded that wood flooring sales would be adversely affected by discontinuing the laminate flooring line. And that makes sense because, if you're shopping, maybe you would want to get your wood flooring and your laminate flooring at the same place. So if we don't have laminate flooring, then some people are just going to completely go somewhere else. So the estimate is that wood flooring production and sales would decline by 10%. What should the company do? Okay, so again, we always start with the lost contribution margin. So if we eliminate the laminate flooring, that would be lost contribution of $40,000. But on kind of the positive side, we would expect to be able to save, or we would be able to eliminate all of those fixed costs. So that would save us the $64,000. So, that's looking good. But then we also would expect to have a decline, the 10% decline in wood flooring production and sales. So you could look at the decline in wood flooring sales. But again, if you have a decline in wood flooring sales, you're going to also have a decline in variable costs, which saves us money. So let's just look at the lost contribution margin related to wood flooring. So that would be, what is that, 10% of 149,000. I did not hit the right buttons there. All right, and keep in mind that lost contribution margin, that should show up as a negative. So that's kind of like a negative thing to the company. So let's see how this ends up. So for this company, if we eliminate laminate flooring, that causes us to lose contribution margin of $40,000, but we're going to save all of these fixed costs, but we're going to lose 10% of the wood flooring contribution margin because some customers want to purchase both at the same place. So let's see what we've got. Oh, so that means there would be an increase in operating income. So in this case, the fixed cost savings would be enough to offset both the lost contribution margin for laminate flooring and the 10% reduction in our sales of wood flooring. So again, in the first example, you would say, no, we don't want to eliminate laminate flooring. Here we would say, no, we don't want to eliminate wood flooring. But here we would say yes, because according to these projections, that would actually increase the operating income. So just in conclusion, my big suggestion would be to focus on what is the lost contribution margin of the product line that the company's thinking about eliminating. And then the problem is going to have to tell you what, if any, fixed costs could be saved if we eliminate the product line. And then there could be some other ramifications for the company. For example, like the decrease in sales of wood flooring. And some of the problems, like we're able to rent out the space we were using. So again, that would be something that would also offset the loss contribution margin. Anyway, let me know if you have any questions. Thank you.